All right, let's get right into it. Today, we're going to tackle one of the most maddening, most common puzzles in the entire world of investing, the investor's paradox. I mean, it's the question that probably keeps a lot of us up at night, right? Why on earth do we seem to have this incredible talent for doing the exact opposite of what we're supposed to do? We get swept up in the excitement when prices are through the roof, and then we hit the panic button the second they drop. It makes no sense. Or does it? Let's figure it out. So, where does the answer lie? Well, you might be surprised to hear it's not in some complex financial spreadsheet. Nope. The answer starts right up here, in our own brains. We're going to talk about these invisible forces, these sneaky little behavioral biases that are pulling the strings on our decisions without us even realizing it. Okay, first up, we've got a big one. It's called recency bias. And it's basically your brain taking a lazy shortcut. It just assumes that whatever has been happening lately is what's going to keep happening forever. So if the market's been on a tear, your brain's screaming, this is it, it's never coming down. And oh man, we've all felt this, haven't we? You see that stock that's just soaring, and that little voice in your head, that's recency bias, starts whispering, you gotta get in on this. This thing's a rocket ship. And that is exactly how we get suckered into buying at the absolute peak. Okay, so that's buying high. But what about selling low? Well, for that, we need to talk about its evil twin, loss aversion. Think about it. The pain of losing $100 feels so much worse than the joy of gaining $100. Feels good. It's a scientifically proven thing. Our brains are just fundamentally wired to hate losing. And that fear, that absolute hatred of losing, is what fuels the panic. The second the charts turn red, loss aversion isn't whispering anymore. It is screaming in your ear. Sell. Sell now. Get out before you lose everything. And that's the impulse. That's the gut reaction that makes us sell right at the bottom, locking in our losses. So you see what's happening? Our own emotions are already setting us up for failure. But wait, it gets even better. Or I should say worse. Enter confirmation bias. This is our brain's sneaky little habit of only looking for evidence that proves we're right and we're smart. You know exactly what I mean. You buy that stock everyone's talking about, and suddenly you're only clicking on the articles that say, Stock X is the next big thing, and you just conveniently scroll right past the ones that say warning signs ahead. It feels good, right? It makes you feel smart, but it's also making you dangerously blind. Okay, so we've got all this chaos happening inside our own heads. But here's the thing. We're not investing in a quiet little room. We're in the middle of a noisy stadium. So let's talk about how the roar of the crowd just pours gasoline on this whole psychological fire. I mean, come on, you've seen these headlines. They're practically screaming at you from your screen. They're designed for one thing, to spark fear and urgency. And what does that do? It acts like a giant megaphone for that loss aversion we just talked about. It takes your personal little worry and turns it into a full-blown public emergency. And naturally, when you see that kind of headline, what's your first thought? Oh my God, what is everyone else doing? And boom, another one of our ancient survival instincts kicks in. Herd mentality. You know, safety in numbers. If you see the whole herd stampeding towards the exit, your first instinct isn't to think, it's to run with them. So let's put it all together. It's a toxic cocktail. You've got the scary media headline that triggers your fear of loss. You see everyone else panicking online, which triggers your herd instinct. And all the while, your confirmation bias is filtering out any sane voices telling you to calm down. It is literally a recipe for disaster, a perfect storm for panic selling. All right, I know, that sounds pretty depressing. It sounds like we're all doomed. But here's the crucial part, the good news. Just knowing that these forces exist, that's half the battle. We can break this cycle. We can stop just reacting to the noise and start acting with a real plan. So what's the cure for all this emotional chaos? Well, it's a choice. On one side, you have this messy world of emotional investing, driven by all these biases and fears. And on the other, you have educated decisions, based on something called fundamental analysis. You see, the problem isn't that we're bad investors. It's often just that we haven't been taught how to tune out the noise and look at the actual facts. And that's really the bottom line here. You can't fight an emotional reaction with more emotion. It just doesn't work. The only way to combat these powerful automatic biases is with a plan, a conscious, thought-out strategy that you build when you're calm and rational, based on real analysis, not just headlines and hype. And that really leaves us with this final thought. The market is always going to have mood swings. It'll be euphoric one day and completely panic the next. That is a given. You can't control that. But what you can control is whether you get swept away by it. So the real question you have to ask yourself is, the market has a mood. Do you have a plan?